What's going on in the San Diego real estate market as we wrap up 2023? I'm Kyle Whissel with Whissel Realty Group, and today I want to talk to you a little bit more about exactly what's going on here in San Diego. We're in December, it's the end of 2023. I want to kind of look a little bit back at the year that was, and maybe look a little bit forward, peek into 2024, where we think things are going. 2023 has been a heck of a roller coaster year. We started the year out on fire. I would say first half of this year, we were back in one of those, feverish markets where buyers were competing, multiple offers on most homes, property values were shooting up in a very, very quick fashion. We saw values in San Diego just from January till about June increase, depending on the location in San Diego, 15 to 20% in 6 months. Which was really fast in a very short period of time. Then interest rates shot through the roof again. So last year we had rates jump from 3% up to about 6%. And then in the middle of this year, we saw interest rates jump from 6% up to like 8%. So now we fell right back off the cliff again. So not always what goes up must come down, but this was kind of one of those years. We went up so fast in such a short period of time. Rates jumped, and now we're starting to see values slide a little bit. So we're finishing the year a little bit on a downswing with home values. We're seeing things get a little bit slower. At the end of the year, we're still gonna finish home values up about 14% year over year, but we were up over 20% for a period of time. So we're kind of giving back some of those gains that we saw. Now, where are we at? Like really specifically, that's the whole year that was, but really today, where are we at? Right now, we're kind of in a little bit of a stalemate with our buyers and with sellers. We have a lot of people that want to buy, but they're not buying because rates are still a little too high. And then we have people that want to sell, but they're not selling because their current rate is, 2, 3, 4%. And if they sell and buy, now they're paying a much higher rate. So they're staying put, which is just kind of a stalemate. So the number of homes selling is down significantly from a year ago. So it's going to be interesting to see where things go. I think most everything as we head into 2024 is really going to hinge on these interest rates. This has become more important than ever. For a long period of time, rates maybe fluctuated 1% up, 1% down, but we're seeing swings now of 1% or 2% change in a single month, which is really, I've done this almost 20 years now. It's kind of unprecedented to see that much movement in short periods of time. So as we continue this volatility, I think the market's going to be very reactionary to what's happening with mortgage interest rates, and that's going to drive a lot of where the market goes. I think that as rates decrease, which all expectations are that rates are going to decrease in 2024, the Fed is going to meet multiple times throughout 2024. A lot of the predictions is they're going to drop their rate anywhere in the neighborhood of 4 to 6 times over the course of 2024. And mortgage rates and the Fed and their rate tend to be in alignment with each other for the most part. So if the Fed's going to be lowering their rate, the expectation is mortgage rates are going to lower as well. So what should happen is rates lower, all those buyers that want to buy that aren't buying, they should get in the game because rates become more attractive to them. And those sellers that were thinking of selling, but the rate jump was too high, if that gap gets a little smaller between the current rate and the new rate, as that gap narrows, gets a little smaller, we expect some of those sellers to get back in the game. But keep in mind, those sellers are selling because they want to move up. They want to get into a bigger property. So even though that's going to be one new home on the market for sale, it's going to increase the inventory. They're then going to go buy a home, which is going to take another home off the market. So for every one that comes on the market, one's going to go off the market. So those move-up buyers are not going to increase our inventory at all. But all these buyers coming in, that the rate became attractive enough for them to buy, that's going to decrease the inventory. So my personal prediction as we head into 2024 is I believe you're going to see rates get lower. I think that's an inevitable thing. And as rates get lower, I think those buyers are going to get in the game. Sellers that are moving up into the bigger home, they're going to take action. So I think you're going to see more transactions happen in 2024. And I think you'll see some upward trajectory when it comes to values. Do I think it's going to be a 20% year? I sure as heck hope not. I don't like when we have massive appreciation like that. If we can just get more stable appreciation, somewhere in the neighborhood of 5 to 10%, that's something that's sustainable for a longer period of time. I don't love these years 20% up, 20% down. That is not healthy for long-term sustainability. So I believe that we are gonna see an up year in 2024. I think somewhere around 10% is probably realistic, plus or minus 5% one way or the other, but right around 10% I think is what we're gonna see in 2024. So I know this is a longer video, but hopefully you're still tuned in. So what does this mean to you, right? If you're thinking about buying, if we believe rates are gonna get lower and that's gonna make it a competitive market again, you have two choices. You could buy now, take the higher rate, but be a little bit more picky and choosy about the home you want because you don't have a whole lot of competition right now. And then when the rates do get lower, you could always refinance into a lower rate. That's the beauty of mortgages. If you do a 30-year fixed rate, your payment's never gonna go up on a 30-year fixed rate. It can only come down. So that's a beautiful thing. So you might want to buy now where you can be a little more picky and choosy, get the right house, and then just refinance it later. Because if you wait until later and the rates do come down and all the buyers are back and you're competing against both the new buyers to the market plus those move-up buyers, now it's competitive again. You might not be able to pick and choose the exact house that you want. So if you're thinking of buying, maybe you want to push your timeline up a little bit, take advantage of this current market that's a little bit slower before those rates dip. Alternatively, if you're thinking about selling, again, it always just depends. If you're selling, you're relocating out of state, you're probably doing that because you have to. So you got to sell, do what you got to do. And if you're thinking about moving up, you're probably in that same boat as buyers, is you could maybe push it forward a little bit, even though that gap between your current rate and the market rate's really big right now. Maybe you push that decision forward a little bit to beat the competition before it gets crazy again, because I'm pretty confident by spring and summer of 24, it's gonna get crazy. So maybe you wanna push that forward a little bit. Again, you're gonna eat a higher rate right now, but we can do things. We can negotiate for the seller of the home that you're purchasing to actually temporarily buy your rate down so you can have a lower rate, as much as 3%. So even though rates today are hovering around 7%, we're in the 6 to 7% range, we could potentially negotiate a deal and get this seller to pay down that rate for you. You could get as low as like a 3 or 4% rate today, temporarily, but you could get it there so that gap isn't so big. So those are the opportunities that are out there. Again, I'm Kyle Whissel with Whissel Realty Group. If you want to connect with the team, explore these options, give us a call, shoot us a text at the number down below.